Good evening, folks. All right, so just so you guys know, channel's not getting deleted. Guys, it's so gullible. All right, so we're looking at the NASDAQ is the weekly chart of the NASDAQ December 2024 delivery contract month. This price run here, this retracement back in, this is what we were noting. Okay, so this was the high. If you watched the Sunday's pre-market before the week started trading, I gave you guidance about this is the level I anticipate as an upside once we take out this high. I mentioned that there was a volume imbalance. You can note that. I wasn't going to do that. We never even worried about that at all. And that's the level, that's where it came from. Okay, so 21,580.25. If you were following along today on Twitter, or X as it's called now, you heard me, well, not heard, but you read in my posts that this is what I was looking for as a draw later on after it did certain things as NASDAQ was opening up in the opening range. So we'll drop down to a daily chart real quick. All right, see the daily chart on the NASDAQ. Here's that retracement down in, and I'll highlight that so you can see the reference points for the fib here, here. Once this high is taken out, this is one of the easiest, like, I guess it's the quick general rule of thumb. Once a range is broken out, you're going to look for either an upside objective, a very simple, cut and dry draw on liquidity, or a frame of reference for potential turtle soup. This is a good general rule of thumb I've used over the years. It's real simple. It's not really based on anything that's in technical books, but 1/4 of the previous range broken out. That's where I think markets can trade to. When we're trading with all-time highs. Okay, so you stick with going long until it proves otherwise. Now, so we have had a range in here on the daily chart that is lower on the close. We made a higher high. We failed to get to that extension, which is fine. It's not important that it trades there. If you go back and watch my Sunday video, you'll hear me say that it can go as much as this. This is where I would think that it is reasonable. Okay, so I really wasn't excited about going any further than that. This is just where the threshold would be once we've taken out this high. How high can it go, ICT? Well, ICT said on Sunday before the market started trading, 21,580.25. That's about as far as I would like to see it trade to. Now, it could have and can still tomorrow, non-farm payroll could just rip right on through that. That's fine. It's not important for me to be accurate about that. So we're going to drop down to a 60-minute chart. All right, you can see here on the hourly chart for NASDAQ, we traded above that high there and then again fell short just below that 21,580. Went to 21,567.25. You can see that price level up here. Then gave up the ghost on the day and traded lower, taking the sell side in here. So we'll note that. See it trade down to that. We have a breaker here. It was high, low, higher high, down close candle in here. Trades up into it, then sends it to the sell side. Go down to a 15-minute time frame. All right, you can see how we had this really fuzzy type price delivery this morning. I was talking about this in X Live. I mentioned how this is problematic, and we'd want to see a obvious run at 10 o'clock. That would be an ideal scenario. And the market does, in fact, trade outside of the range high here, right there at noon. Okay, so we trade above, and then the market attacks the sell side and the sell side right there. These relative equal lows, we'll look at that. That was the original basis for why I was looking for 490 as a draw to the sell side, and then a rally up towards the 21,580.25 level, which was the very specific price level I showed you on the weekly chart as an extension should. All right, so here's the 1-minute chart, and I'm showing you the Thursday overnight London session lows. So you can see these two lows in here. In true form, it would be this. you would probably have your charts annotating that right there. And if you weren't looking at that one, this would be certainly fine. And that was the one I was annotating today. But I called the level 21,490. Okay, so that way you can see it, follow along with my posts on Twitter or X again. And the market moves away from that. And as we enter the 9 o'clock hour, I was talking about how the market was staying inside of this particular candlesticks range, the high and the low, staying inside that. This is problematic. So because of that, I want to see it trade to 10 o'clock. So at 10 o'clock, then we'll start watching and seeing what it's going to do for us. But up in here, I looked at it and said, okay, well, it looks like we've taken the buy side here. So this is what you'll see, kind of like fleshing it out for you. That is a minor buy side. And this is a minor sell side. Meaning buy stops above this high, sell stops above this, below this low. And then ultimately the level down here I was aiming for. And then the other level to the upside, these are two primary. This is primary buy side. This is primary sell side. Minor sell side. Minor buy side. Okay, so I indicated on Twitter or X again that I'd like to see the 8 a.m., which is this high here. I'd like to see that taken and then trade down to 21,490 and then trade in the direction to the 21,580 level. Okay, so that was what I gave guidance for this morning before it actually happened. Market traded up. We broke down. The bodies of the candles on this rally up. That was a shift in market structure there. So as the market trades back above this old high, you'll see in the recording, I'll add it at the end of this video, the run back above that, I went short, and then we had an immediate rebalance where the market trades back up into this low here. I added to it there. The market then attacked this level here. I had several limit orders layered below that in the event that we didn't get down to 21,490. And that served me well because it took two limit orders, left one, went right down to the price, but the spread wouldn't let me get out on it. And then the remaining four contracts would not be filled there either. So the market rallied back up, came back and hit my stop at 526. And I gave guidance on that as well, real time on X. The market then went into range bound consolidation. And then right in here, we're going to look at on a 5-second chart. But the framework is this. If we look at this little area right in here, I'm going to highlight that so that way we'll know what we're referring to all through here. Okay, so we have high, higher high, higher high, and then this high taking out that high. Okay, so in this little range right here, we're going to look at the inefficiency and volume imbalance that was keyed off of on a 5-second chart. So I'm going to drop down to a 5-second chart now. All right, so here's the 5-second chart on the NASDAQ. So you can see we had high, higher high, higher high. So I'm going to get rid of this rectangle here because it's really not serving anything except for me helping highlight where in the 5-second chart the time frame was, where the shorts were taken. So in this little area right here, we watch and see how that SIBI right there. See how the bodies are respecting that. Wicks above it, yes, that's fine, but the bodies are respecting that. Okay, so when we created that, I went short, aiming for consequent encroachment and volume imbalance right in here. And it's a 5-second chart, so marketing in, you're not going to get the perfect entries. And I didn't have time to be doing limit orders. Plus, I just want to prove that the orders are being filled with the buy and sell buttons up here, which is what you don't see when you're using market replay. I don't use market replay. and then the market trades lower, it comes back up in, and I'm treating this as a premium array. So it's kind of like a reclaimed sell side imbalance, buy side efficiency. It was used here, and then once more come back above here. Notice the body's respecting the midpoint, consequent encroachment, and then the high. So I saw that. I was like, okay, this is a bull flag. I know retail's going to want to see that and want to trade higher off of that. And I faded it and then used the reclaimed CIVI here. So market breaks down. I want to see it take out this low. It does so aggressively. See all the thin price action in here? Whereas it's back and forth, even going lower. But here it creates this nice inefficiency. Then we come back up in. There's two of them. Always give room for it to trade up in the higher one there. And then aggressively sells off into the 21,490 level. And you can see that that was the limit order being filled. So I wanted to make sure I had that done today because I outlined it. And then this morning I said I'd like to see it trade down into, after taking the 8 o'clock high, then trade down into 21,490 and then slow roll up into 21,580 direction. So, okay, you see these lows right here? That to me, with these relative equal lows, and then we have this low. So we have high, low, lower low, lower low. So all these lows are characteristic of a favorable, it's a good candidate for sell side liquidity. So that means the non-farm payroll Friday tomorrow, we could see, if we don't trade aggressively higher, they may want to attack this area in here. If not, Friday may be going into early part of next week. So that's what I'm expecting. Non-farm payroll Friday tomorrow, and I think that's going to be it. Again, as a celebration of Bitcoin going to 100,000, I will resume doing Forex market reviews on the daily. Again, I'm not doing them right now because it's the holiday. And well, it's holiday season for ICT, let's put it that way. I'm usually not even looking at the charts. But when we resume the 2025 mentorship on YouTube, all for free, every day I'll be bringing in a Forex market review. So I'll cover the pound dollar, euro dollar, dollar index, and I'll also do a continuation of index futures as you're used to seeing now. And then also I'm going to be bringing in commodity prices. So I'll be looking at the majors in the commodity markets in every sector in that. So foods, meats, metals, energies, debt instruments, all that business, agricultural. So hopefully you found this insightful. Until I talk to you again, be safe.